Today we are going to see Standard 12 Account Part 1, Chapter number 1, Introduction to Partnership. Definition of Partnership. Section 4 of the Indian Partnership Act 1932 defines partnership as partnership is a relation between the persons who have agreed to share the profit of a business carried on by all or any one of them acting for all. Here, partnership means relation between the persons. Here, uh, more than two or more than two persons come in contact with each other and to share the profit of the business, or any one person do work for other partners. A person who enters into such relationship are individually called partners and collectively a firm. Now, what are the reasons that the partnership firm comes into existence? That the first reason is an individual has sufficient funds but does not have required skill. For example, if one person have skill of cooking and he or she wants to start a business of restaurant or an tiffin service, but he or she does not have firm. And one person who wants to start any business and to do investment, but he or she does not have any skill, but he have fund. So one person have skill and one person have fund. Both person comes in contact with each other and do partnership and start their firm. An individual has required skill but does not have sufficient fund. In first sentence, they told that a person have fund but don't have skill, and second is that person have skill but does not have fund. So here, some person partnership firm, each and every person have their own capability. They make a partnership to share each other's capability and grow the business, to distribute the business risk. In partnership firm, the risk are also distributed among all the partners. Now, characteristics of partnership. What are the characteristics of partnership? First is creation by contract. Partnership is done by contract. The contract may be in written or may be in oral, but written agreement is more preferable, or we can say advisable. Profit objective. The main objective of each and every partner is to make profit. Legal business. The main aim of the partnership firm is the profit also, but it must be a legal. It must be a legal and not be illegal. Number of partners. Companies Act 2013, maximum number of partners in a firm subject to maximum of 100, means as per the Companies Act, the number of partners in the firm must be 100, but as per the rule of 2014, the maximum number of the partners in the firm is to be 50. Okay, agent of each partner. Each and every partner is an agent of another partner. Unlimited liability. Now, what do you mean by unlimited liability? Okay, for example, if a person who wants to start the business have taken loan from the bank, and after taking loan, the person is not able to pay the loan on a time, and if he or she just sells the property of business, then also they have not paid loan and they have to sell the personal property also. They are obliged to pay the loan by selling their personal property also. It is known as unlimited liability. owners and management of the firm. In partnership, partners are the owners of the firm and also the management of the firm. They have to do management of the firm as they are owners. Now, next topic, partnership deed. What do you mean by partnership deed? Partnership deed means a written agreement. Partnership deed means it is a written agreement. A written agreement of partnership is known as partnership deed. A written partnership deed is desirable and advisable so that the solution of any misunderstanding or dispute in future can be obtained on the basis of provisions of the partnership deed. In partnership deed, all the information is given that how the partner has to act in the firm, what will be the share of the capital in the business, what will be the profit sharing, how much they have to pay, how much capital they have to invest, and how much they can do drawing from the business. Now, what are the content? The content included in partnership deed are first is details of the partner. Details of the partner means name and address of each and every partners. Detail of the firm, name of the firm and address of the firm. Types of business. Types of business. Here the information about the business, that which type of business is it, what is the production of the business. Now, commencement of the partnership. Commencement of the partnership means from which date the partnership came into existence. Capital, which partner have introduced, how much amount of capital is given in the partnership deed. Interest on capital. Here one point is there, if no provision is made in the partnership deed, no interest on capital is paid to the partners. Here if they have mentioned the partnership deed that interest on capital is paid to the partner, then only they have to pay. Otherwise there is no need of paying interest on capital to the partners. Drawings. Interest on drawings. Now here drawings. What is the maximum amount of drawing can be withdrawn is mentioned in the partnership deed. Interest on drawing. How much percent interest on drawing is to be paid to the partners have to pay, it have to be mentioned. If it is not mentioned, then there is no need of paying it. Distribution of profit and loss. Now here in partnership deed, if they have mentioned that profit and loss sharing ratio, then only they have to share as per the ratio. But if there is no provision is made in the partnership deed as per Partnership Act, profit and loss is distributed in equal proportion. Means if in partnership deed they have given ratio that they have to share the ratio in 2:1 or 3:1, then only they have to share as per that ratio. Otherwise they have to distribute profit and loss equally. Now, salary, bonus, commission and remuneration to the partners. All these details are also given in the partnership deed. Now, this 11th point is most important from viewpoint of MCQ and from viewpoint of one sentence. Interest on loan provided by partner to firm. If no provision is made in the partnership deed, as per the Partnership Act, 6% interest will be paid on the loan given by partner to firm. Now here they are told, if there is no provision, means no any information is given that how much to pay interest on loan, at that time they have to pay 6% interest on loan to the partner. Interest on partner's loan is treated as expense of the business and it is debited to profit and loss account. 12th is goodwill. Goodwill is computed at the time of admission of the new partner or the retirement of the new partner. Admission and retirement. There are also provisions for the admission and retirement of the partners in partnership deed. Now, dissolution of the firm. What do you mean by dissolution of the firm? Dissolution means discontinuing the business under the name of the said partnership firm. Means for if any of the work they have to discontinuing the business under the name of the said partnership firm, means they have to discontinue the partnership, that is known as dissolution of the firm. Now, the following provisions of a Partnership Act 1932 will be applicable if no partnership deed is prepared. If no partnership deed at that time, they have to follow the certain points. Each partner contributes capital in the firm by mutual agreement. Mutual agreement means whatever amount they have to contribute, they can contribute. They want to contribute, they can contribute amount as per their mutual understanding. Interest on capital of partner cannot be made because there is no partnership deed. The distribution of profit and loss will remain equal proportion. Interest on drawing of the partner cannot be charged, and salary, bonus, commission or remuneration cannot be paid to the partners. If partnership deed is not there. 6% interest is payable for the loan given by partners to the firm. If any reasonable expense incurred by the partners for the firm, the partner has the right to reimburse it. Means if any of the expense is done by the partner for the firm, they have right to take it. Now here we have finished our provisions, our topics of partnership deed.